This is the secret to the long wave. This was the epiphany about 10 years ago when I realized, well, everything works within a cycle. Once you understand that concept, how energy moves through a medium, you look at the world totally different. My forecasting went through the roof. It was pretty good during the 23 years as an advisor, but it just skyrocketed after this simple insight of, there's cycles in everything. There's a cycle to life, there's a cycle to the universe, your breathing, your heart rate, your brain activity, right? When there's no more brain activity, isn't that what they measure to know if you passed on or not? So always remember this and think of it from this perspective, because we're going to have a unique advantage to see the future where most people fail, or let's say linear extrapolate the future, right? This is what real estate investors are making right now. They're extrapolating the trend and nothing rises. Even the climate has cycles. Now, if you look at this, I really like this GIF here because to me, it's reflective of the three significant business side. There's really four in the long wave, but I focus on the larger one being the long wave. The red one would be the Kuznets or the real estate cycle, and the blue one or the green one would be the business cycle itself, right? Usually 4 to 8 years. The real estate is 18 to 25 years, and the long wave 55 to 75 years. It encompasses a life cycle. Now, why that's important? Because we need to understand where we are in these cycles. And if we understand that, we're going to be much more accurate in forecasting and understand what's coming, right? Because the long wave is simply a satellite view of what's coming. So instead of dependent on our brains, and by the way, our brain is the one that's failing us here because it only sees the world linear. It does not see the cycles. We naturally extrapolate the trends, and this is why people make so many mistakes. Okay, for today's topic, it's really about money supply and this aging business cycle. And if you can take a look at already, excuse me, we've seen Canada M1 money supply, and this is shrinking in negative territory. And in its history, we've never seen anything like this. So it's a warning, right? It's just a warning, just like the leading indicators. It's telling us what's coming. It's not what's happening here today. Today, the coincident indicators are still healthy. Hence, we're still having economic growth. It's slowing, but it's telling us about the future. We're looking at future scenarios, and the scenarios are determinant of how we're going to allocate the model. So that's the warning. But what came out today is or updated anyways, the U.S., you can see this is even more current, and you can see the M2 percentage change. Now, after the massive money printing during the lockdowns, we can see continues to be in a negative territory. Again, it's a warning sign. Now, mind you, it's not what's happening today, right? Because the money supply works through the system and the money contraction works through the system, but with a lag. So it's not immediate. And a lot of people are making that error. So, well, everything looks fine, Joseph. What are you worried about? Why are the models so conservative? The models are conservative for two disciplines. The only two disciplines studying history is one is valuations, hence why value investors always have the best long-term track record. And on the other side, tactical asset allocation, right? You're allocating according to the risk in the business cycle, and we take valuations and consumer sentiment. And it's all those led to the bubble and everything in 2021, 2022. Bonds overvalued. Real estate's extremely overvalued and levered, and the stock market. Now, this is just warning us what's to come. That's all it is. Again, we don't want opinions. We want to know historical facts that help us become more successful, right? Economic winter's coming. This is why I've launched this website, is to help us go through economic winter before economic spring and the next boom in evolution and technology occurs, right? And when that comes, by the way, it's not all bad news. It's going to rock our world, but it won't look like anything that we have today, right? Because the whole system is imploding slowly, and most people aren't cognizant of it. I've said that Europe is really leading the world into the contraction. If you see M3, this is just updating. Look at June's data, and plainly obvious once it breaks the long-term trend line or green, usually there's a contraction. We can see the first one there in the early 90s when it peaked in the business cycle, and then 2007, and then the crisis, and Europe had 2 recessions in that period, and then the blow-off, the COVID lockdown monetary blow-off, and you can see the latest numbers. So it's a warning, and I believe that what we're going to see is the crisis emerging out of Europe first, and then spreading to here in North America. So there are clear warning indicators. And the models that I have are highly in cash for that reason. It's where's the earnings going to come from if there is a credit contraction that is occurring? As always, I'm really liking the questions. People are asking more questions. I want you to be confident, because what I wanted to do with YouTube is provide more of an education in terms of understanding the long wave model and how it works and what's very different. And by the way, it's not taught in school. This is not classical economics that you can have an education on. Basically, I had to teach this myself through reading various economic theories and how the system works, and then fall into Kondrativ and Schumpeter. And then when I was managing capital, you learned all the things. So it is important that I can slowly educate you on actually what this theory is. Now, before I get on to the website, I want, if you haven't read, let me see if this comes up there. Yeah, The Price of Time. This is a fantastic book. By the way, it's on my website here. And if you just go to resources, there'll be a link to have access to the book, right? So there you can also subscribe to our newsletter, to the blog now, to any of the services, if you want access to the long wave model, right? The model will just dictate the allocation, and then you work with your advisor, if you do it on your own, to pick those investments that work. But I want to, first of all, I want to read the back really quickly. Interest rates haven't simply fallen, they were pushed. And by their pushing, the world's central banks have constructed the hall of mirrors in which every investor has become, out of necessity, a speculator. So argues Edward Chancellor in this brilliant chronicle of the most important prices in capitalism, which is interest rates. You must read it. It's a masterpiece of history, analysis, and properly understood outrage. James Grant, editor of the Grant Interest Rate Observer. Another thing I want to read to you very quickly, and I said it's in this very thick, okay, let me see if I can get this. There we go. Very thick book. And it's important because this is what I've been warning. And this is to those who are bullish about real estate and why I'm extremely bullish. Forget about what I say, what the model says, extremely. In 2015, the Bank for International Settlements warned the finance industry was crowding out the real economy. More bank loans went to sectors with plenty of collateral, such as real estate, which generated little by the way of efficiency improvements, right? What capitalism is savings and investment, which existed up until 71. Those savings are funneled into industries. Those industries rock our world, right? Like genomics, stem cell revolution, artificial intelligence, robotics, 3D printing, solar, renewable energy. People think I'm not a fan. These are all technologies that are price and performance are improved, right? The price is getting cheaper, so the adoption rates are increasing. So I'm not against it. But the key is real estate is not productive to the economy. Actually, it's counterproductive because people are going into so much debt to purchase a home they can't afford. And this is the fault of the fiat system and deregulating the financial industry. You know, we haven't learned from history. And this is the thing that's interesting to a person. I'm an ignorant Canadian. I only am aware of this model and perfected this model because I was devastated financially and I wanted to figure out how things work. I'm really curious by nature. And from that, I came across this, learned it, educated, and then through some bad experience with fund managers, I said I was going to create the top forecasting model in the world. Well, let's work towards top 10, right? And history will be a judge if I've accomplished that. So I have to be humble about that. But seriously, I mean, you read history, you read these books, and there's so many other books I have here. I'm an avid reader, and you say, what the heck happened to society? I mean, here we are, there's this evolution in technology. When it comes to finance, we're dum-dums. A completely idiotic. There's three things we should have known is don't deregulate the financial industry. Do not move into a fiat monetary system. Don't over-indebt the governments. Do not over-indebt the private sector. Yeah, we've done all those. And the outcome is going to be horrendous to society, of course. And we all will pay a price, no matter if those who follow me are able to protect their families and their investments and their savings and skate through, hopefully, through economic winter. That part completely frustrates me as a human being. But I guess this is why they call the long wave, as one of other social disciplines, a social cycle. We repeat these cycles. And then there are people who want to say that the long wave doesn't exist. Well, yes, it does, because we've repeated all the mistakes of the past. Anyways, that's my rant for today. Let me leave you with this, is that these indicators are going to become more important as we go through and move into economic winter. Still looks like 2024, not this year. There's nothing on my radar that's showing up that we should be concerned, but we're prepared. One last point. Please, if you know somebody that is hurting regarding the resets or being impacted by the economy and real estate resets and they could lose their home, have them follow me, because starting in August, I'll be working with some mortgage brokers, and people know my story about real estate in '89 at the top, and went on to collapse, and it wiped us out. Our condo lost 50% of its value. So I'm an expert. I know exactly what these people are going through. So I've always said I was going to help people when this thing starts to unwind, and I'll give you guidance, insights, right? Knowledge of what, because, knowledge is very powerful. I can give you some insights regarding where real estate's headed, give you some insights of how to handle this emotionally with your family. I went through it all. Very few people can say they're an expert. And I'm very dubious of people who are saying real estate experts. If you're a real estate expert and you haven't gone through a bear market, you're not a real estate expert. You've only seen a one-way train. And if you're an expert, you've probably paid off all your leverage and sold your overvalued properties. That's a true real estate expert. So anyway, say that, have them follow me, contact me through my website, and I plan to do it at the first Saturday of every month until this thing is over with, just to help people with information, unbiased information from somebody who's gone through what you're probably going through. Thanks for listening. I hope you follow, subscribe, and let me know what you think. We'll talk soon.